It's the Bitcoin weekly chart that is screaming a massive warning to BTC holders. What's up, everyone? Welcome to Crypto Capital Venture. Let's just jump into the video. How about that? How about that? Over 2/3 of economists believe a recession is likely to hit in 2023. Everybody, I'm starting with that because I understand. I understand that Bitcoin is relying on traditional markets. I understand that Bitcoin is relying on everything else going on in the world right now. I get comments sometimes. It's like, hey, Dan, you got to pay attention to these things. You can't ignore it. And I'm not. Trust me, I am not. The writing is on the wall, and the majority of U.S. economists agree that the U.S. is in store for a recession next year. Oh man, that kind of adds a little bit of like a roller coaster ride into the equation, because we want this correction to be over this year so that we can maybe start entering a bull market next year, right? I mean, that's what a lot of people want. Let's go look at the weekly chart. And again, these charts, it's not to predict anything. These charts are to act as a roadmap amidst all of this unknown, amidst all of the chaos. It's a visualization tool to anticipate different scenarios so that we can make wise decisions in the present day. And that's where we are, everybody, the present day. This green box, everybody, is it. I don't know if you've been watching my videos. This Fibonacci, it's a Fibonacci long-term macro Fibonacci retracement, meaning here's the last bear market low all the way back here, 2018, to bull market high, back to a retracement area. The 786 line right around 17,000, the 618 line right around 27, 28,000. And right now, Bitcoin, as we know, we've been tracking it, bottoming out between the 200 moving average, the 200 week moving average, and the 786 line. And this is the chart that is screaming, it's screaming a warning to BTC holders. I mentioned that in the intro of the video. This same exact Fibonacci channel, the 618 to 786, saw a very similar bottom formation back here in 2018, you might remember, and it was between the 786 line and, once again, the 200-week moving average, just kind of the inverse of what is happening now. Right now, the 200-week moving average is actually above the 786 line. We've identified that. Now, if we look at the previous cycle even, same exact thing happened. 200-week moving average, the 786 line, Bitcoin bottoming out between those two areas. So here's why the chart is screaming. I keep talking about this Fibonacci zone. I keep talking about the 200-week moving average and Bitcoin forming structure between the 200-week moving average, the red line, and this yellow line, the 786. What we were tracking is last week's candle. For a moment, Bitcoin was trading above the 200-week moving average. We wanted to see a weekly close above the 200-week moving average. Look at this. It was a green candle, but the weekly chart closed below the 200-week moving average. And right now, actually falling away from the 200-week moving average on this weekly chart. Now, mind you, there are 6 days, 5 hours left. And y'all know how crazy things can get, especially with everything going on with interest rates, meaning we can really continue lower, or Bitcoin, if traditional markets recover quickly towards the end of this week, Bitcoin could actually find its way back up into the range of the 200-week moving average, if not above it, right? This would be a very bullish indicator if this happened. But the warning is right here. This immediate resistance here on the 200-week moving average, you can actually even go all the way back here to that last bear market formation low on the weekly chart. And look what Bitcoin did. It bounced off the one indicator, the 200-week moving average, in that capitulation, made its way to the 200-week moving average, and then bounced all the way back down to made its way to the 786 line, and then made its way back down to the 200-week moving average. And Bitcoin right now, if you look at the weekly chart, is like it's doing something extremely similar, right? Meaning it made its way to the bottom towards the 786 line, cruises back up to the 200-week moving average, and the warning sign is it getting ready to kind of cruise back down and test this lower indicator line, the 786 line, $17,000, $18,000. Is that getting ready to happen? Or at the very least, put in a higher low on this chart. So swing low to current swing high on the weekly. And is Bitcoin getting ready to fall and test $20,000 at 618, 786, $19,000? I want to go visit real quick the S&P 500 index. If there's a recession getting ready to happen, 2023, and I should probably do just a straight up TA video on this chart and traditional markets as it coincides with the potential of a recession. And as that data kind of intermingles with this data all the way back here, 2007 to 2009, all the way back here, this is a weekly chart. But if we're looking at this chart, notice how that last recession, when it was kind of making its way to the downside, this 50-week moving average, I'm sorry, the 20-week moving average in green crosses below the 50-week moving average, right? And then it just falls. Everything just falls. Well, we recently on the S&P 500 just had the 20-week moving average fall below the 50-week moving average in blue. But notice what it did on its way down back then. And real quick, let me zoom in because I know it's a little zoomed out. It's a little tough to see. And let me open the chart a little bit. So here we are. And you can see it's falling. But what it was doing was it was kind of bouncing to these moving averages, the 50-week moving average and the 20-week moving average, the blue and green lines. So right now, even if there's going to be a recession in 2023, the case is there that we get these little mini rallies, these pullbacks to these moving averages. So the 20-week moving average currently around 4,100. 50-week moving average currently around 43, 4,400. Now, between the 20-week moving average and the 50-week moving average is an area where this market could rally, right? And this could be a short-term thing before the final capitulation or the final downturn, right? Depending on what charts do. And so we have to anticipate things like this on the macro environment with traditional markets. And this is something, this whole entire speculative scenario I'm talking about right now is something that Bitcoin has never done. So as we're zoomed in and we're kind of looking at the weekly and we're hoping it bottoms out, who knows what traditional markets will be doing all in here leading into 2023. And the volatility that is here for Bitcoin, we've already identified it's going to be there based on historical evidence of these charts in Bitcoin bottom, bear market bottom formations, right? There's already going to be volatility here. But now we sprinkle in what's going on with traditional markets, what's going on with interest rates and the sentiment involved there. And wow, this is going to get kind of crazy. So we can speculate where the bottom might be if it's not the 786. We can do another video on that. But right now, this week, let's watch and see how markets react to this interest rate news that's coming on Wednesday, right? Another interest rate raise. Let's see what traditional markets even do on the daily chart. There's a case, the rally to the upside that we've been seeing recently continues after a short-term maybe dip to the 20-day moving average. This is a daily chart. Continues to the upside. So maybe a brief swing low before continuation into a rally that we just talked about potentially for the rest of the summer going into this fall. And what that does for Bitcoin will be extremely important on this weekly chart and how Bitcoin interacts with not only the 200-week moving average around 22,800, but all the way up to the 618 area, around $28,000 of this Fibonacci macro support area. It's a pullback support area on the macro. So can Bitcoin escape it if there is a rally for traditional markets? And this is the type of stuff we'll be watching. But I would say the biggest warning on these Bitcoin charts right now is the fact that Bitcoin consolidating, not closing the weekly candle above the 200-week moving average, and just consolidating almost identical to how it did in bear market formations in the past. So we're going to continue tracking it. This is what I'm watching on Bitcoin on the macro level. Obviously, we can dig into the short-term charts, but I just thought this would be an important Bitcoin video to continue tracking. 6 days, 5 hours left on the weekly chart. So we will watch to see what happens. Let me know your thoughts, everybody, in the comments below. Hit the like for me. It really means a lot. I'll see you in the next video. God bless.